How to spot for real systematic risk in US stock markets. It is when the yield curve is inverted. An example was in 2022, we saw the shorter term borrowing cost, like 2 years yield in yellow, exceeded that of the longer term borrowing cost, like the 10 years yield in orange. And when the yield curve is inverted, the stock market in 2022 went into a bear market. Nasdaq collapsed 37%. And when the yield curve started to normalize in 2024, the US stock market broke above its 2021 high and resumed its upward trend until today. This analysis is based on technical studies and does not constitute financial advice. Please consult your licensed broker before investing. A systematic risk is when a single market segment fails and trigger a domino effect. And in my opinion, I'm watching very closely on any potential of the yield inversion and also the continuous of the yields and interest rate climb or the uptrending of them. So what saved the 2022 meltdown? And let me just zoom into this. It was when the yield started to flatten. So this was an inversion. And when it started to flatten, so this is an uptrending of yield that we can see that it was 0.25 or about 0.5. So this was uptrending. And this is how the flattening of the yields looks like. So when the interest rates start to flatten, this means that inflation is under control. At least the market perceived that. So remember, just a few years ago in 2022, inflation went to a high of 9%. And thankfully, in 2024, with this flattening of yield plus the spread in 2024, if you could see yellow is below the orange, it means that the spread also normalized. So with the shorter term borrowing rates that is below of the longer term borrowings. So we saw that the US stock market start to resume its bull. Let me just go back here and we could see that in here 2024 is started to resume back, broke above 2021 high till today. So this is my checklist to measure the US stock market. There are three things. The US bonds have to be on the uptrend. The inflation should stay low, and the yield curve must be healthy and not inverted. So why do I classify the US stock market as of now to be cautiously bullish? It is because of the US bonds has already broken below its major trend in 2022, and it seems to me that it's likely to remain under pressure, and there is a real risk of a continuous downtrend. So inflation, let's look at inflation. And we're seeing that inflation having a risk to keep trending higher because of the current situation right now. So the latest CPI reading was in April, is at 3.8, and it seems that it's on the way up. How about May? How about June? But the only saving grace, I would say that it is the yield curve right now. It is not inverted, but the risk remain. It is still pointing upwards. It still remain elevated. Interest rate and yields compared to those days now is at 4%, 4.6%. Since the three criteria are not fully met, any dip in the US stock market could be a short-term to mid-term correction. So the trigger for a deeper meltdown in the US stock market is when the bond is down, inflation is up, yield is uptrending. This is uptrending. This is flattened, uptrending, plus inverted. So this will be my timing. And as of now, since the yield is not in uptrending or inverted, this is my plan, is that any dip, like right now, it could be a buying opportunity. But when the yield curve is inverted and there's an uptrending in the interest rates, any correction will be much longer and deeper than those in 2022. If you find what I just share is useful, please save it and share it to yourself and your friends. My name is Con Hao. I enjoy studying how different markets currently behave to uncover emerging trends, the potential trending market of tomorrow. Feel free to leave any comments below. I love to exchange ideas with you on what is about to come. Really happy that you stay through this tutorial. You have many great trading weeks ahead.